I want to hear somebody come out and say the markets are volatile because the world is unsteady. That's what's going on. This volatility is not just Christmas week. It's been going for 3 months.
But Tom, I just heard someone say maximum uncertainty. Having watched this for 35 years, don't you always hear uncertainty? Isn't that sort of an excuse to say it's? Or are you
certainly not maximum uncertainty. We all lived through the financial crisis.
Right.
We almost went under.
And
that was maximum uncertainty.
We lived through 1987.
Yeah.
Well, and you know, the oil shock and all the things, and 4 years of Jimmy Carter. We lived through a lot of Volcker and 21.5% prime rates. So, I mean, we've seen some of this before.
Yeah, no, this is normal, and your viewers should not panic. It's an opportunity to make money. I mean, this is a volatile period that's very typical. Absolutely. These periods of volatility are very ordinary. Why is it happening now? Because the 3 biggest economies in the world are having trouble and have a lot of uncertainty.
I agree on all fronts, but in terms of how fast it unfolds, in terms of this point swings that happen within seconds and hours, I mean, algorithmic trading has to compress these time frames, no?
Maybe.
I mean, making it
the crash in '87 was pretty quick. I mean, maybe you would blame that on program trading if you go all the way back
22%.
to
Portfolio insurance and
there's always,
futures.
with the benefit of hindsight, we always want to blame a machine or some sort of dark cause. But no, these things can happen very quickly. And it's not. And a lot of the analysts are saying, oh, well, Christmas week, it's because of tax selling or it's because of reason B, C, or D that makes no sense to me. And the other thing is there's not a lot of liquidity. Have you seen how much volume has traded this week? It's been enormous. On a half day on Monday, it was 6.5 billion shares. There's plenty of trading going on. The markets are volatile.
Do you think there is liquidity or there isn't liquidity?
Yeah. People stayed home from their vacations. I'm at my family party. People are asking me about the Fed. It's not like 2/3 of the world is off this week and they're not minding their portfolio. We're in a very volatile period, and coincidentally, it's Christmas week. And it's going to continue into the new year until we've sorted a few of these things out.
And the sorting things out are answering questions about the economy.
Yeah, is China really growing at 6%? Probably not, but we can discuss that. The China trade war, certainly what is the trajectory of the Fed? I don't think that is the single most important factor, as some people do think. And then certainly Western Europe, which you've been all over, Will. Brexit is a big deal for the UK and for the rest of the EU.
The behavior of the markets can become incredibly volatile, incredibly depressed, and incredibly exuberant. And I think we forget the late 90s, and we think about the days where Qualcomm traded up to $700 and the environment that we were in then and the daily ranges that we were experiencing in the late 90s. Was that the machines? Or is that just the behavioral emotion of exuberance? And I think that is what the investor has to understand and manage around, is those emotions. Not so much worrying about placing the blame on why the volatility is occurring, but how to react to the volatility, because the volatility is always going to be there, to Tom's point.